If there is a staircase in your new home, there's a pretty good chance you have kids. And if you have a growing or young, or you're just starting a family, there are things you need to consider, not only from the standpoint of choosing and purchasing a home, but financing that home as well. If you've already started down the road, the chances are pretty good that you've thought about the neighborhood that you need to be in, how many bedrooms that you need to have, do you want a cul-de-sac, what's the yard like? All these are questions about the property itself. And those are great questions. They're super important for you just to discuss with your real estate agent. But if you've got little Johnny, little baby Johnny, and he's gonna grow up in this house, you need to start thinking about other things like the mortgage. How do we structure a mortgage for a growing family? So here are a few tips that you really can keep in mind. And by the way, as we talk about these tips, if you have questions, feel free to DM me and just put growing family. If you do that in the DMs, we can start a conversation and I'll know exactly what you're wondering about. Okay, so what are the 3 tips that I've got for you today? Number 1, and the most important, consider maybe a smaller down payment. Why do you say that, Michael? Why would I want to put less money down? Well, especially if this is your first child, but even if it's your second, third, or seventh, you probably don't yet understand the financial needs you're going to have with this extra mouth to feed. That means you need to hold on to as much cash as you can. Once you put cash into your home through a down payment, it's harder to get that cash back out. It's definitely more expensive. So if you're considering a 30% down payment or maybe even a 20% down payment just to avoid PMI, if you have a young family, you might want to consider reducing to a 10 or a 5% down payment to keep as much cash in the bank as you can. So that's number 1. Number 2, the term of the loan. Most people immediately think, I'm going to do a 30-year mortgage, and that's fine. 30-year loans are right for most people. But there's a chance if you have a growing family, you might want to consider doing a shorter term loan, such as an ARM, in order to have a lower payment if you know, hey, we're going to outgrow this house, or we got this great starter home, but it's not in the school system that we're in. Maybe you want to talk to your loan officer about an adjustable rate mortgage, which offers you a slightly lower rate for a given period of time before it begins to adjust. You don't want to live in a home with an adjustable rate mortgage typically, because you don't want to be stuck if those rates somehow go up. In the environment we're filming this video, it's more likely they're going to come down than go up, but some people just don't like the risk of an adjustable rate mortgage. Still, in order to really understand where you are at, you need to talk with your loan officer about all the different term options. So number 1, maybe less down payment. Number 2, is it worth a shorter term mortgage? And then number 3, where am I buying this home? Sometimes you can buy in a geographical area that'll offer you more mortgage options. For instance, if you're buying in a rural area, there's a program called the USDA loan that requires no down payment, and you might be eligible for that program, which may let you keep even more cash in your pocket. So when you're talking to me or your other loan officer, make sure you talk about where we're purchasing a home. What's the down payment going to be? How long is the term of the loan? And where are we financing? And are there any special financing options available to us as a growing family? If you have a young family, congratulations. You're going to love the process. I'm blessed to have lived through that process, and our children have exited the home, and we couldn't be happier. But you're going to enjoy these years as you grow with your kids. You just want to do it in the best financial way.